Hello everyone. Good afternoon and welcome to the PivotBoss Monthly Market Outlook for July 1st. This is the monthly market outlook for July 2020. And again, thank you all for joining me. If you are new to PivotBoss here, my name is Frank Ochoa. I am the author of the book Secrets of a Pivot Boss. I run the PivotBoss Premium Trading Room. Thank you for stopping by our trading room here. This is the free PivotBoss community room in our premium trading room. This is a $99 per month subscription here. Today we did fantastic. Yesterday, fantastic. We've been really doing well with the volatility here lately. I'll talk about some of the trades we took a little bit earlier today. But some great moves, great finish here. As a matter of fact, the NQ, I picked the absolute top of the day, 10-3-10, had my order there as my last fill, but did not get filled at 10-3-10. Only 10 contracts got filled at that price, but we picked it great and a fantastic move nonetheless. But again, you should be able to click on the live button here and see the screen share and hear the audio. And also, this is being recorded for later playback. By the way, I'll say this at the beginning here, for those of you watching back on playback and for those of you who are watching live and rewatch it, please hit the like button on that one, and we'll see how many likes we can get on this video here. You all have been fantastic with like, sharing, and subscribing to the PivotBoss TV channel, so thank you for that. All right, let's take a look here. One thing I wanted to do, the quick agenda for today. Today is July 1st, and it starts the first trading day of the second half of the year. We just finished a tremendous, unprecedented first half of the year with how we sold off and the recovery we've seen since. What I wanted to do here is talk about some of the candidates here that we looked at throughout the first half of the year after the sell-off began. The April 2020 outlook is really where we talked about all the candidates that we could be looking at for potential bounce ahead, and we also identified different sectors. We'll review some of those here just to refresh our memories on what we talked about. We'll also look at some of the candidates here, a couple of the candidates that we looked at last month that have done well, and then we'll take a look at some candidates here for this month, both short term and also throughout the rest of the month. And for those of you who have any candidates that you'd like me to take a look at as well, please add those to the chat here. Thank you, TV, for adding those there. I will take a look at those, and if you have others, for those of you in the room, please add those as well, and I'll get to those down the way here. So, and then one more thing, not only are we going to look at new candidates and review some of the old ones, the other thing that we're going to talk about before we get to our new candidates is seasonality and the seasonality of July, so we'll take a look at that as well. So number one here, I wanted to review some of the candidates real quickly that we talked about before here. This has been a fantastic bounce for some of these, and we had a primary group that we looked at before. Tandem is one of those. This has been one of my core holdings here, closed on highs yesterday with a fantastic rally. Today hit a new high, nearly getting to 100 here. That's the high for the last couple of years there. That's a 99.83 print. That's a big time move here that we've seen from the $4 level where we found it initially. And again, as I've mentioned before, one thing we talked about after the initial COVID selling pressure is that 45s is a double. If you can get in between 45 and 50, it's a double back to 90 to 100. And so we've gotten that move here, and that's been a double from the lows. The way that we've transitioned through the 92.5 here, you see that big wedge here, and we broke through the upside. No such thing as a triple top, right? We got the big breakout and a continuation. Holding above 90 here could transition this to the next major upside target zone ahead. We have to really look at this thing in a weekly time frame to kind of really take in where this thing could be headed. But right here, you'll see we've just broken 90 here, and we have at least to the top end of this range. So when we were talking before, we had two upside targets. So I mentioned that 45 could be a double, but if we can get through 90, we have upwards of 120 to 140 that could be ahead for tandem. We've gone sideways here for a year and a half. We're breaking to the upside. That was a forceful move through 90. This one could have much more upside ahead. By the time it's all said and done, this thing may run 100 handles off those lows, which were our buying ad zones. So again, very, very solid one here was tandem. That's one of the ones we offered earlier in April 2020 market outlook. By the way, April tends to be one of the better market outlooks. August can be a great one as well because of the seasonal tendencies from April. After the first 3 months of the year have played out, April tends to provide phenomenal opportunities heading into summer. So that one always has a lot of great takeaways. ROKU was another one here. This one we mentioned that we could double from a 60 back up in the room. We kept talking 60 in here, could double back. And right now we're at 128, so it's already been a fantastic one here. This one off of the 100 edge here. 100 is a big time level. We've obviously trading right in the middle of that chop. If it were ever to come back to 100, it could still be a great buy for perhaps a move again across the range. But this one's been great as well. Today, just a phenomenal squeeze on news here today as an extreme reversal setup played out over the last day. SBUX was another one we had as a buy op. We talked about this one being a return. You know, the bounce anything into 50 was a huge move, right? Because we had that was major significant market structure support, and it hit it and bounced off that area. Once we got back above it, I mentioned if it gets anywhere into the 60 to 65 zone, it could still be a great buy. So this one has been strong for the circumstances that we've been in. Obviously, with COVID continuing to hang around and linger, and also increasing in many instances in states around the country. My state, for example, Texas. So again, we'll continue to see how it plays out, but 70 continues to be an area to watch here as support. You can see here that if price in SBUX were to come down and take out the previous month's low here, that blue line, that could provide a swing back toward those recent highs. So we could be looking at a 70 to 85 play ahead. So that's going to be something to watch out if this thing continues to be range bound. Another one here that we've had is PayPal. We talked about the need to go with more tech and those folks who again have to transition to online payments and the like. This thing has had a tremendous bounce so far. Look at this thing going all the way to 170s, and that's from the 80-90 lows here. So tremendous move. We talked about this one in the early April outlook as well, and from that blast off at the beginning of April, look how it has just exploded to the upside. PayPal and the entire group. We had the credit card processing group as a group to take long in April. The rest of the credit card processors here are MasterCard. You can see how this one has bounced from 200 up to 310, and we also had Visa as well as one of those. But by far, PayPal outperformed Visa and MasterCard and really did well. And those are the ones that we actually had as a hot group. The first hot group we talked about. The other one that we had as a hot group was Lowe's and Home Depot. Again, if we were going to be in lockdown and folks weren't going to be able to spend their discretionary income on vacations and the like, then perhaps it was going to be spent at home. And you can see again the blast off we've had from those lows. Again, this was in that group that we talked about could be a COVID spike. One of the ones that would return back to the highs quicker than the others. Home Depot, again, very similar. Big, quick snapback reaction. Again, the 140 low back toward 260, and now compressing at highs. Again, another great snapback as a group in general. We also had others. For example, AAP was one that we had as a long candidate right here. Okay, thank you for those suggestions. Now, AAP was another one we had as a long candidate. Again, a significant move. We had 90 as a key level. It actually took 90 out and then higher low and go back to 150. Again, a great bounce candidate. So we've had a ton of these that have done quite well. Apple was another long candidate we had. Again, this major low right here in the trading room, we had it as a significant signal low, but from that push and the higher low in April gave us a 3-point reversal, and from that point, early April, again, just nonstop up to 370. So just a straight run for Apple. Facebook, Netflix were other two that we had as well. You can see Facebook's move. Now with Facebook, again, always seems to be in the news for some sort of heat they're taking for whatever is going on. That recent 5-day move led to a 10% plus correction. In the room, I mentioned that this could be a good bounce back toward the midpoint of that range, and now we have ourselves a good key range. This is the key range impulse move, high-low. The midpoint is the pivot range. And now we have our extensions, 25, 50, 75, and 100. These are the PivotBoss pivots. And if you look to the upside, we have our upside targets as well. So down the road, if we reach the 100% expansion target, it's pointing to 285. 285. So we talked about this in our trading room here over the last couple of days. On Monday, actually, we talked about it. I mentioned this thing could fill that midpoint of the impulse move, and from there we could be looking at a 285. And if we did drop right down here, again, this is what I mentioned, between 200 and 205 could be an opportunity to trap late bears and squeeze up to 285. So that could be the way forward there for Facebook. But again, this impulse move right here gives us great key ranges, key range levels to use moving forward. Another one here we had was Netflix, and again, Netflix has been fantastic throughout this period from the lows and continues to push to highs. 485 here today. So those are several of the ones that we've had over the course of the first portion of the second quarter as we now enter the third quarter. We also had Zoom, obviously, as a long candidate as well. This one has by far exceeded all expectations. Just an incredible run. Hard to see this holding on for Zoom. For example, all of this down here is just ill-traded, and at some point you're going to have to fill that in. So at the very least, we may be looking at a run back toward 180 at some point. But then it could still be a buy opportunity down the road for higher highs as this thing continues to mature. So this one's been fantastic. Again, Dwayne brought this to our room early on during the action here, and it was right at 100, sitting at 100, and then it exploded to the upside. So it was just a great move out of this one. Again, this was one of the new economy stocks that we had as long candidates back in April. Another new economy stock we had as a long candidate was TDOC, and you can see here again has been just a tremendous mover. This one is showing a little bit of rejection at the key range high here, so if price can't find acceptance above 203.85 pretty soon, we may have a bit of a pullback toward 169.68, but the path remains higher, so any pullback still could be a great buy for a continuation higher. Ultimately, if this thing were to break to the upside, we have 238 and 272 as upside targets. But right now, again, keep an eye right here on this level, because right here, if this was a rejection and we're seeing a lower high, it may need to flush first and then start to work higher down the road. So 170 may be the best buy for a 270 move, a plus 100 in there. Another one we had as a buy candidate was Etsy. We talked early on that, again, if people were going to be out of jobs, 40 plus million people unemployed, that they may have to start selling online, masks and things the like. And again, look at since April right here, explodes to the upside, takes out the previous mid at 45 and skyrockets to 111 here today, the highest high closing here today. Again, hard to see this continuing higher. Perhaps tomorrow, if this thing were to gap, say, below 108s, man, it could leave behind quite the exclamation point at the top right there, right? A blow-off top type of candle. You know, something like this, for example, where we've gone, you know, we were already strong, then we went kind of vertical and closed like this, and then the next day becomes one of those days. That could certainly happen. But even then, we come into here and we continue higher. Etsy's been strong. Again, that was one of those new economy stocks that we talked about in our earlier market outlooks. And Spotify was another one. I use this all day, every day. Was using it right now as I was preparing here for the market outlook. This one's been incredible. Again, hard to see it continuing at that pace once things get vertical like this, and once you see the volume profile get this thin right here, that tells you that we need to likely retrade back to those prices in order to fill out this profile. So we may have to slide back as low as 200 at some point, followed by what could be a big continuation higher. But again, this one, very, very bullish. This was another one we had as a buy candidate. Again, here's the April. Failed new low, and an explosive move to the upside. Just tremendous. So those are several of the stocks here that we've had as long candidates. Last month, we had Shopify. And then we'll start getting into the market here. Last month, we had Shopify as a buy op. This was a 1 month buy. Again, we had a higher value relationship here. Price drops into this zone here and explodes to the upside. So 750 up to 1,000 plus today, closing on highs. Super, super strong move. That was one of the buy candidates we had last month. Another one was DocuSign. This was also a, again, higher value relationship. We had this here, pop, and then here's your pullback and go. And it closed on highs. So again, very, very strong candidates here that we've had during these monthly market outlooks. Again, I want to say thank you all a lot for joining me and offering suggestions as we go. Right now, I do want to start taking a look here at some of these futures markets, because we're getting to some spots in the market that are very, very important. Number one, for the ES here, July could be quite bullish. It could be a tremendously bullish month. You can see right now that we are trending up kind of in this channel here. If I can draw a channel a little bit better, say like this. Something that many of you may notice is this pattern here. When you're trending in a channel and you start to coil up toward the bottom end, you're getting a lot of people short in here, and all of a sudden it explodes and it rallies like this. This is something I've been showing in the pre-market reports in the morning here. We've been talking about this pattern. We had a failed new low to begin the week here, and that led to a great squeeze so far. And now again, 3150 has been the major level in the charts. If it gets above 3150, it opens up clear air back to 3400. And if we're looking at this from a key range perspective, key range being this impulse high down to that impulse low, back to the mid. So you have 32.31 as the high, 29.22 as the low. If we do break to the upside, we have a 100% target that takes us to 35.38. And we have a 50% target that takes us right there to 33.85. 33.85 basically takes us to the all-time high, which is just a few handles above. From the low of today's market, again, we don't know if today is going to be the low of the month after one day. Certainly could. From that low, if we project higher average monthly range over the last 10 months, we get 3,400 even. That tells you over the last 10 months we've been averaging however much. Looks like 55 points right here. No, that's the current range. 346 points. That's the average. From this low, it takes us right to that 34. So basically, we're looking at a move that can take us right into 34. On an average range, 33.16 would be a 75% move. So somewhere in that box right there becomes a very good high probability target. Now, I mentioned that this could be very important here because we have two seasonal tendencies that we're coming up against. Number one, July tends to be very bullish based on seasonal tendencies. That means that it tends to rally into the 4th of July holiday, which is this Saturday, followed by it tends to linger throughout the rest of the month higher. Now, if we do that and we rally the rest of the month, being here, and we get to these targets or anywhere in here, we now bump up against the all-time high up here. And now we've had a bullish July, which is a seasonal tendency, and now we're coming into August, and August tends to be bearish from a seasonal standpoint. From a seasonal standpoint, we tend to see the biggest correction here in August, which could then be the best buying opportunity for a finish into the end of the year under average circumstances. Pandemic and U.S. election year, again, may not be ideal average circumstances, but again, we at least have a baseline to work off of. So right now we have the potential to see a squeeze that takes us higher throughout July. And if we reach these highs, that might be the ideal point to take some off the table in August, ahead of the August pullback, and then buy back in perhaps for a late year finish if it lines up that way. The way that played out here last year was spot on. So you can see here, there's July. July is up, and in August is a big pullback. The August low was the low for the rest of the year, right? October can have the secondary pullback, and there it was, October low, end of the year high. That is the ideal scenario. We talked about that last year heading into August, and we'll talk about it again now and next month as well. But that's the tendency here. How it plays out this time, who knows? This could certainly be the high right now. This could be a right shoulder, and we may be breaking down pretty soon. And in that case, we would be coming back towards 2750. So anything can happen at any time, and we just kind of have to judge it as it goes. But at the moment, this is setting up quite bullishly if this thing can continue to stay, above 3K. And if we can start chiseling through that 3150, it becomes quite bullish. Now, for those of you that have Thinkorswim, you can go to Style, go to Chart Mode, and go to Seasonality. And then you go over here and you click this button here and go to Show Price as Percentage, and it'll go as a percentage. So basically, the red line is average range over the last 5 years of daily data, and the blue line is current. So they started pretty normally for this year, and then right there it was COVID sell-off and things got big time differential, right? Now we're bouncing back. At some point, maybe, what do? Maybe we come back to this line and converge. Who knows? But what happens here is if you zoom in right here, and it's hard because this lower line is way off, you would see it more pronounced, but that low right there going into that high, that's basically the month of July. So the pullback, and then that's the end of June for a move into July and the end of July. That's the seasonal tendency over the last 5 years. If I don't show prices percent, let me see. So if we don't have that other line there obscuring our view, look how bullish that is. That's the tendency, seasonal tendency for July. That's what we're looking for right now, right? Again, seasonal tendencies are just averages of what tends to happen. Doesn't mean it will happen, but seasonal tendencies during certain seasons do have a lot of weight. And we'll see how that plays out. So right here, 10. Right here, this is 10 years of one year data. And again, just kind of zooming in on the pertinent data there. This is over the last 10 years. Rally at the end of June there up to the end here, and that takes you right into the end of July. So that's the tendency for this month. So again, doesn't mean exactly how it's going to play out, but I would say leaning more bullish here unless something significantly turns. Taking out the month's midpoints would be something that would be cause for concern. And now if we look at, again, the seasonal tendency here, this is July up, and this is August down. And then August is the low, and it bounces to the end of the year. This right here tends to be the October pullback low, and it bounces. That's a 10-year average look right there. So again, very powerful stuff here as we come into this month. So I did want to talk about seasonal tendencies here. The way to get back out of this here is come back to your normal style, and now we're ready to rock and roll. So again, seasonal tendency is just an average of what can happen here. We can squeeze throughout the end of July, and then from there we may see some sort of weakness. I would sell at the end, the last week of July, right? Last week of July tends to be a little weak, and then you see the whoosh at the beginning of August. Being on both sides of those, ahead of the curve, being able to anticipate those, I think will go a long way toward really milking the next couple of months here. So again, let's see how this plays out. Obviously, one thing I do want to mention here is that we've built a ton of energy right here inside the middle portion of this key range. When you just trade in the middle 50%, it's what I call a neutral key range. It's building energy. It's an energy building phase. It's bringing participants into the market, and at some point it's going to see a massive move one way or another. Like right here, and then you see one last shakeout leg, failed low, and this thing explodes to the upside. That's the type of thing that we could see here at some point. If we, for example, should be significant. So again, we will see, if something like this happens, that could be a huge go route for this market. So we'll keep an eye on that. I did want to talk also the NQ. And for the NQ, I want to go out even higher time frame. Here's a weekly chart. You can see it's always interesting when you put this thing on a weekly time frame and just see what the path has been. But on a weekly time frame, and this is looking back 10 years, so this back here is 2010. 2010. It's a long time ago. And you've seen the pattern we've gone in the NQ. One thing that's been constant is that the 200-week moving average has been there for support, and oftentimes it never even gets that low before it bounces. But this year it was there, and it's bounced tremendously from that. The next time, if we get down there, maybe somewhere in here, who knows? But this market's been very, very strong, and again continues to show strength on these highs. Now last week we finished with a bearish rejection tail right there. Friday was a very bearish day. We had this right here as the midpoint, and we're above it right now. Obviously today's Wednesday. We have one more day in the week tomorrow, and then we have a holiday in observance of 4th of July here in the United States. So again, we could be looking at a continuation higher into that holiday, but at the same time here, there's time for this thing to fail back below. But to close beyond that mid right there is huge. Next week we could come back to this mid here and just explode to the upside. This thing has been very strong. One thing you notice is that sellers are eager to sell. They're eager to sell it here, and it closed to the mid and exploded. They were eager to sell here, right? Closed to the mid and exploded. They were eager to sell here. Closed to the mid, exploded higher, and here it is again. There it is again. So again, you can see, tried to sell it, boom. 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 This market is relentless right now when it comes to the squeeze at the moment. I think if this were to fail at some point, it all comes back to this level right here, and that's the high of the year, and it's trying to hold it, and that's kind of where we rejected this week to begin the week. We came and held it and bounced, and at some point down the road we fail at that level. That's what could open up a bit more weakness, and from that high to this low, you have yourself a giant key range that could open the way. But 85.86 or 8600, 85.80, that's a good downside target here based on the key range if that were to play out. But right now it's just so strong. You can see how sellers have come in, and each time it's been an opportunity to sell it. Trap bears and rally through those mids. Okay, I wanted to talk here about crude oil right now. Crude oil has been super bullish. For those of you following our monthly, our pre-market reports, The pre-market video, a lot of times what I'll focus on are these types of patterns right there where price has compressed after a move. So you get this type of move right there, a nice move, and then you compress, and then you get the next wave, and then you compress, and then you get the next wave. And right here, those were spot on in terms of helping us ID how far price may go. We were looking at 7-day ranges in here, and you can see down here this is a narrow 7-day range, narrow 7-day range, back here as well, back here, and each time here you would see some explosive move out of those ranges time and time again. We were using these upper red dots here as cues as to how far price could likely go, and again, very useful tool. And right now we're compressing like that again up here. We're trading around the 40 level. We haven't quite filled the gap. Here's the gap right here. That gap is a close of 41.50, 41.57. So did we get it back here? Oh, 41.63. So we did fill. Ha! Right on the money. So we're right here trading in this narrow range right now. And a couple of levels here stand out. 40 stands out. Let's go with this line here. 40 stands out here. 40 half stands out in the short term, and 39 half. And those are kind of like the battle lines right now for this chart. It's incredible here as this market looks like this, and it's just these three levels are the high or the low on any given day or thereabouts. I mean, it's very close. It's incredible, those three levels. We continue to trend up, so right here you can see that this is still sloping up. That 8 period is still sloping up. This 21 period is sloping up. The PIMA trigger zone is still sloping up. So when it comes into the zone, it's still a good buy. It comes into the zone, it's still a good buy. Right now, we were able to call the low by one tick yesterday in CL. We had 38.86 as the potential low there from the 8 period. It got to 85s and bounced. Today we talked about it again. The low there at what was it, 39.05s. That was it again. And this was the midpoint after it squeezed. So again, those are two very important levels. Right now, bulls are trying to keep 39s bid. From a short-term perspective, heading into tomorrow's market, this is a short-term idea. Keep an eye on 2-day lows. Keep an eye on 2-day lows. If price drops down and takes out 2-day lows tomorrow and then starts to pop back above 39s, that could provide a buy that leads to a pretty significant upside recovery, and that could lead to what ultimately ends up being a bullish outside day. Think this right here, for example, or this right here. So it comes down here, it takes out that low, and then it turns back around and goes through the high. Comes down here, takes out the low, turns around, takes out the high. Here's a low, here's a low. It may come down here and take out the low tomorrow, and if it does, that's an opportunity to trap, and if it turns around back above 39.05s, you could be looking at an upside day that takes you into 41s, right, or above this high. At one of these days, one of these days. That's what we're looking for. One of these days, right? Take out the low, turn around, and rally back above. So that's a short-term idea for tomorrow. If you're a bear and you think this thing's going to drop off 40, then you're looking for the opposite here. You want to see price come up here and reject 40s. And if it rejects 40s and starts to drop through these lows, you want to see it crush through 39 and perhaps turn into a huge stop run day down. You want this idea, right? Or more likely this idea where it takes out 2 or 3 day lows and crushes. And so that would open up the doors to a 38 reversal, maybe 37.5. So again, these are short-term ideas right now. From a multi-week perspective, this thing is compressing tremendously. It still appears that the overall trend is still up. The 200-day average is still above at 44.69 on this view. So again, a failed low here could get this thing going higher toward 44.69 to meet that 200-day average, with a shot to see even more movement beyond that. So this is getting interesting here for crude oil. I would say if anything shook out to the downside, watch for an idea to trap and return to the upside. I wanted to take a look at YM. YM has been a really good one here, has really traded well. You can definitely see it honors these boundaries really, really well. A lot of great movement off these edges. One of the things we look at in our room is market structure plays, where you have market structure edges kind of like this, where price trades predominantly in that zone and builds a range, market facilitation, and then it will see expansion through that range and hold and continue. But when it fails to hold that range, it will drop all the way back to the bottom of that range, and then it could bounce back and keep trading. In this case, it failed and dropped to the next lowest point and even a lower point below that. But that market structure becomes very important. Look at this over here, right? So we're inside that market structure right now for the YM. So basically, anything between last month's low and last month's high, the stage is set. That's pretty much it. And we could chop between that range, 24.5 and 27.7. Basically, that's the range. If we fail to hold down here, so this is the low right there, and that's 24.4. Failure to hold that level opens up a rotation that can take you all the way back down quite a bit, right? 22, 23K. I mean, you're losing thousands here. So definitely bulls need to keep this area bid to return it back up here. Failure to hold that level rotates this thing back to at least this low here. So that's what we're looking at with regards to the YM. Just a very interesting pattern here. Look at this compression. We still have an uptrend, and you have this line here. Again, if it squeezes, you have a very good shot to go up there and take out the 27.6s and hit that 28K level. So that could be a great move. We got to start getting above 26K for that. And again, keep an eye on these 2-day lows here. Just like we saw right now with crude oil. Look at this day right here. It rejected the previous low and rallied. And then right here, 2 days of absorption where bulls have kept it bid above the midpoint of that squeeze day. There's the midpoint, you know, this level. So 25.2 is very important. So tomorrow, again, after hours today, this thing could drop to 25.2, maybe a little bit below. And if it starts to pop back above 25.2, 25.3, man, this thing has a shot to have a bullish outside day. And then we could be rallying back to that blue line right there. So PivotBoss pivots, previous high, previous month's low. This blue dot is previous month's close. This is the previous month's midpoint. And if we start to take this bid through that mid, 26K, that's the target right there. If we can't get through that mid, that's the target right there, 24.4. So right now, working on the assumption here that if they take out these lows, it becomes a bear trap and moves higher. So again, short-term idea here for these, with perhaps month-long implications as a July rally can take place in that event. So those are some thoughts on those futures. Here's a look at RTY. And then let's start looking at some of these stocks as well. I have a good short list here, and then we'll get to some of the ones you've requested as well. So RTY right now has been interesting here. It looks very similar to the YM. It's had a great impulse move here. That's given us a key range to work off of. You can see after this sharp high, we've really had lower highs here, kind of a right shoulder type of thing going on. All of these have that, and it tends to look that way right before we squeeze off this lower edge. Now there is that one time where this channel will fail, and that's going to be the edge where it breaks, and in that case we come back to this 1175 level. So that's kind of the blueprint for RTY. We have this great squeeze right here, We have 2 days of absorption. Perhaps tomorrow's a failed low that gets you, say, below 14. 13.95, 14 even, and then boom, you slingshot higher. If this can close through 15s, man, it opens up 150 handles up toward 1650 very quickly, and we could be looking at much more beyond that. So again, that could be tremendous right there for this one as well, if it plays out in that manner. Again, this is what I'm looking at, is this squeeze day, followed by a couple of hold days here. Again, it's bringing people in. There may be one, flush here, and then it explodes higher. Needs to stay above that dot on a closing basis. We'll see if that can play out. Obviously, bears are definitely defending, and the sell stops, the buy stops are above 1460 here, as it could easily lead to a squeeze. Got to see if they can get it going. Gold, yeah, let's take a look at gold. For gold, we've had a tremendous move out of gold. We've had targets as high as 1831 for a while, 1800 right to 1831. We had this strong impulse sell-off here that gave us this key range. And we got stuck in this range for 2.5 months. 2.5, nearly 3 months. And finally things changed on that day right there. I didn't really notice it till maybe a day or two later, where I said, you know what, this actually looks like it may be a breakout instead of a fade opportunity, because of the way that we got that breakout right at that level. So this right here looks like it changed the tide. We had this compression all happening at an important level, 1740. This thing breaks to the upside and lifts. I noted that this 8-period average was rising nicely to provide support. So was a 21. That was giving us a good PIMA trigger zone. And I mentioned that 1750 to 1760 needs to hold on a pullback. And man, what a pullback that was. Great bounce. Today we did get a bearish outside day for at least a little while, as it took out the previous month's high, got a new high at 1807s, and then back to lows. It does have higher value relationship support. 1750 to 1760 still important. PIMA trigger zone still important, because it couldn't even close below it. And now again, we could see a great squeeze that happens out of this. Now, one key range here that I continue to watch again is that large key range here that has implications as high as 1957. So you have this key range right here. We've built energy at the top of that area. We break into the upside, and now we could start walking our way higher toward 1957s. 1831 is the first major target, but again, that target is something that could be hit over 2 to 3 months out. That could be a significant target all the way into 1957 here. Again, sometime in August. If we get the August pullback in the markets like we usually expect, then perhaps gold gets an August bump higher. And again, if you get a 2 to 3 month compression, you can get about 2 to 3 months of release of energy. So we may be looking at a 1957 move here, coming into September, but it needs to hold 1750. The moment it fails to hold that level, or more specifically 1738, which is this level, if it fails to hold that zone, it opens up a rotation back down. So the early level to watch would be 1750 in this case. So those are some good charts there. Now I wanted to bring up some ideas here for the current week and the current month ahead. This is Abbott Labs. Abbott's had a tremendous rally from the low, 62 to 100. And now you see this flag developing here. One thing that I'm keying in on is the lower value relationship right here with the pivot range. So that pivot range is here, this pivot range is lower. But then the close for the month was higher than the pivot range there. That's what I call a lower value with a change of bias. And that means that you could see this type of behavior next. So as long as this thing holds above 90, we have a shot to squeeze back toward 98 to 101 based on average range. So from the low of this month here, we could be looking at this target range somewhere in this area. Again, even if we were to hit 90 tomorrow, as long as it continues to close above 90 for the month, we have a good shot to squeeze. Now, even if we were to fail here and go to this low, that low could still be a buy back to the close, and then perhaps it might try to go higher. So two areas to look to engage this one. First one is at 90 for a shot higher, and the next one would be down at 85. The next one here is AEM. AEM has a very similar pattern as well. Again, lower value right here, but the close was above, so it's a lower value with a change of bias, which is a bullish signal there. And you can see today, price came all the way back to the prior low and closed higher. And again, that could be an easy move to new highs. Right now trading 64.31 on last price, and 70.27 up to 73 is the upside targets for the month. So again, if this one continues to push through these 64 halves, 65s, it opens up a move right into this target zone here based off of all this energy built up and the lower value relationship that's been broken. Okay, so the next one here on the list is Target. Now, Target is an inside value relationship. So for those of you that have my book, Secrets of a Pivot Boss, the inside value relationship is a very explosive relationship. It's an energy building relationship. That's when you have a pivot range here, that pink, those three pink lines, and they're inside the previous month's range. And additionally, you also have a narrow range this current month, which is more narrow than usual. So you can see usually you have a range that's this wide or this wide or this wide or this wide, but this one is super narrow. This one was narrow too, and when it closed below that mid, that's the move that happened. So that's the type of move that we're up against here for Target. We've rallied tremendously, we've built up a ton of energy, and we're about to see a move. It's an inside value, and because of the up move, we'd be looking perhaps for an upward squeeze. But the way that it closed today suggests that we may see the stops come out here and see it push back down. Either way it goes, it's going to be a great move, and perhaps day two will give us a lot of information about which way it's going. Again, whenever it does get that move and moves away from this level, it's one of the edges that you get the first test, and then you tend to go through that edge as well as expansion takes place. So this is one that could be a very good explosive breakout opportunity here in the month ahead. Another one here to watch is BLMN. This is just a short-term idea here. We've had this one bounce from $5 up to $15. And ever since that bounce here, it's pulled back a bit and developed a bit of support off of the $9 level here. So that's $9 right there. What you're seeing right now is this pattern right here, and I think this is super, super bullish in many cases for at least a 1 to 5 day rally. And many times the next day can be a super strong move as well. And so what's happened is you see the sell-off here, which began with one of our PivotBoss signals. It's sold off here, and then you get a sideways range, and it builds energy down here. And this one's built energy for about a good 5 days. So if I bring this down to 5 here, we can quantify that 5-day range. 73% of average, so not super, super compressed, but close. And that was of today's range. Yesterday was a little bit lower, it looks like. But you can definitely tell us at the lower end of the volatility range here, and then we could be looking at a squeeze soon. If we get a squeeze, we get about 5 points of range. So right here, right, there's 5 points. You can see that from that level right there and bring it across, every time we get a compression, we get about 5 points of movement. And here we are compressing again, maybe 5 points of movement's coming ahead. The fact that we're here trading around 11, maybe 11 gives you 15 to 16, right? Right now 15.20 would be the primary target. If we take the closed bid, maybe we have the previous high here as well. So this one looks like it has a really good shot to rally over the next 1 to 5 days and perhaps over the next 2 to 3 weeks. One thing I will add to this is that the entry here would be any pullback into, say, 1050, and that could give you a great first day breakout move. So tomorrow it would be ideal if we had a range that looks something like you know, like this, right? You get the big day up and a little pullback. So it pulls back here, rallies through these highs, explodes higher, and then continues higher from there. That would be ideal. Now, where this one is wrong is if this were to close, say, below 10 bucks tomorrow, any closing price below 10 probably kills this trade, and then you'd be watching down here. So again, very small risk factor on that one. The next one on the list here is ALT. Again, some of these short-term ideas, some of these 2 to 3 week ideas. This one is Altimmune. You have to be very careful with stocks like this. It was a nothing here at 3 bucks, and all of a sudden we've seen this thing explode higher on clinical trials. So again, you know how these are. Sometimes they're hit or miss, huge jackpot to be made, and then sometimes they give it to you back the other way. So this one has a pretty significant rejection here that developed today after a kind of a shakeout. So we got that move. This was a shakeout. This may have a good shot to see another leg higher here pretty soon. So we could be looking at a rally through 11 that can take us into 15 or perhaps beyond, at least on one more wave up. If this thing fails to hold 9, the thing's over. 950, it's over. So this one you gotta have a close eye on it because of the nature of the industry group that it's in. Now this is a sell candidate here. This is AEO. AEO right here has a higher value relationship, but it closed below that higher value relationship. That's what I call a higher value with a change of bias. It's changed its bias to the downside. And then today what you're seeing is a failed new high. You're seeing a failed new high above 4-day highs. Price rallied through 4-day highs and rejected and closed back below the midpoint of the previous session's range with a sell signal here. That is extremely bearish. We've also rejected the previous month's midpoint, and that could easily lead to a return back toward recent lows. So we could be looking at a return back toward 925, maybe even below that. Again, that's just to the recent lows. If this thing fails to hold 1050, it fails in terms of market structure and can drop all the way back towards 7 bucks. So this is American Eagle. Now, this fails again right at the mid or perhaps at the previous month's mid, because if tomorrow closes like this with a big counter bar up, that could really run the stops of whoever got short in here and failed. So that's the out, right? You got to be out quick at that point. But right now it's setting up for a move back toward 9, and that's a sell candidate right there. HGV is another one here. This is Hilton Grand Vacations. Again, there were certain industry groups that we talked about before that we mentioned would bounce back faster. We had hot groups and not groups for industry group and sector rotation a few months ago. And one of the things we talked about were hot groups were the credit card processing groups, home improvement, right? Some of the not groups were going to be airlines and hotels, cruises, right? Travel, oil and gas, restaurants. Now there would be certain outliers, of course. But this is case in point here where, we did get a bounce. This is 20 bucks and did get to 26. That's pretty solid, right? It's over a double. But we've clearly seen others that have bounced back to where we've gotten to, and then also beyond, as the NQ and others are now higher. This one is one of those, again, with rollbacks happening in certain areas with COVID here. Again, that could lead to another round of weakness here. So higher value relationship. This is overlapping higher value relationship with a lower close. That again is a change of bias to the downside. Given today that it rallied into that range and rejected, again, the inclination is to continue lower to take out the previous month's low. 16 would be the next support down, but I mean this thing could, see this thing marked down a little bit lower than that even. So that's another short-term sell. Again, just similar to the last one, if this thing were to close higher tomorrow through that mid, it's a very quick squeeze back to the previous month's high. And another one here, and then we'll get to some of the ones here that you've asked about. I know a lot of great stocks here, so we'll get on that next. This is the last one on my list here, and this is KKR. KKR has been in a great trend. You can see the channeling behavior here. It's now built energy here. Higher value relationship here. Price dropped into the pivot range and bounced back out of it today. The idea is that you continue to hold. Say continue to hold 30. Even if it pulls back to 30 tomorrow, hold it, and you could see a squeeze back to 34 as this thing breaks to the upside with the broader market here and continues higher. So a lot of really good energy that's built up in here. We're looking for an explosion to the upside, given the higher value relationship and everything that's happening here. Again, if this thing fails to hold 30 on a closing basis, the trade's over at that point, because now we're likely going to the previous month's low. Okay, so I'm going to start looking at some of the stocks here that you all have put in the room. So again, I want to say thank you all very much for adding those stocks. The first ones here are at the top here, MRVL. So this is Marvel, and you'll see with Marvel here, this one has rallied tremendously from the lows, 1650 to 37, so that's a double there. Holding here 32 halves as it consolidates on highs. This rally right here is tremendous and comes on earnings. It left behind a very, very thinly traded profile there. So anytime I see that, I always feel like there's a potential to retrade back through those prices at some point. So if you've gotten into this move and enjoyed some, trimming some and leaving some is always a good idea, and adding back 28s. Again, we could literally get all the way back to that zone and still be a great buying opportunity ahead. Now, having said that, if we still hold above 32s here, this thing's building energy for another move higher. 40 could be ahead for this one, as right now the market reopens here in the ES. We'll look at that as well. JKS is another one here. So JKS, let's pop it. Oh, with the market reopening now, everything is processing here. Big break to the upside here for JKS. Jinko Solar here. We have a strong low here with kind of this rounded behavior on the right side here. Taking out the 200. It hasn't really been able to stay above the 200 at all this year, and now it's at CVPOC. I can understand here if this is an opportunity for some to take profits here where this thing rotates back down. But if it can get through 19s here, it opens up quite a bit of upside here that could be significant moving forward. So that's definitely something that you'll be watching for, is above 19, because it's been trapped above this zone. And if it falls back below 18s here, this thing may rotate back to 15 before it starts getting headed higher again. But this doesn't look bad here for a continuation toward the upper portion of this distribution, given all of the sideways range-bound action we've seen here before. KHC is the other one here. This is Kraft Heinz. Again, another one that has had a pretty significant rally here and is now holding on highs. Again, easy to see this thing continuing higher given the trend, but at some point all good trends come to an end, and they tend to do it at resistance, right? And this is a major resistance level right here, which is 34s. You can see it come right across here. That's basically resistance right there. And that's year and a half worth of resistance in that area. At some point, you'd like to see this thing break through that zone and get going to the upside. It hasn't been able to do it yet, but that time may be coming at some point. But again, above 34s really opens it up. It is on a pullback cycle low, so it could easily test 34s, but can it get through that zone would be interesting to see. Even if this thing were to get down to, say, 25s, 25 could still be a good get for a shot at trading to 34 and maybe trying to go fill some gaps up above. So Yeah, this one has major overhead resistance there at 34s. Another one here is VXRT. So this one right here, big time move here, 2 to 14. Again, this has it looks obviously news related here, and I don't really have any information regarding this stock at all. And the chart looks like it has just exploded to the upside, obviously, and anything can happen from here. Again, when you have this type of move and this blow off here, it can easily come right back. It could also be the beginning of something that triggers much more movement here to the upside. Hard to really give an opinion on this one at the moment. Here is ACN. So ACN, again, this one is one that is knocking on the door to resistance there. You have resistance right there, right? This is the high of the year, and there we are right here. This is the high of last month. This is today. Here's the previous month's close. So we're, again, banging up to resistance here. And while some may look to sell it, until proven otherwise, it will continue to go up. Just like it did here, and it bounced out of the pivot range. It did here and bounced out of that pivot range. Changed the bias here and bounced out of it here. It needs to fail below 206, 205 in order to break this trend. Until then, it could theoretically drop to 206 here and just be a good buy to 220 to 225s. Right now it has 232, 238 as the bullish upside targets, but that's from the current low here of the month. If we get a pullback, it could be a great continuation here to the upside. And these targets right here would move down if this moves down by some amount. So we'd be looking at a 225 to 230-ish type of play. So this one looks good for one last buy try, but if it can't hold 205s, things are probably changed. Thanks for the candidates, by the way. Here's ALKS. This is Alchemies. This one has rallied here recently through the 200-day right there. And look at the oomph through that level. It really had some lift. This is after having some higher low success here and rally back toward VPOC. From a longer term perspective, this one really hasn't been able to find much strength above the 200-day for a long time. So this was the last time it really had acceptance above the 200. Then it gapped way down and then didn't test it really, got it and sold, and now it's holding above it. So either this has to be the time where it's about to change course, or anybody buying above the 200 is about to get their stops taken out, right? So right now, whoever's long up here, if it fails through 18s, the stops come out. Right now, bears defending new highs. So I can definitely see the potential for this one to get going to the upside if it's going to change its trend, given 2+ years of weakness. But concerned for a trap above the 200-day here. Now, if this thing can come back to the 200-day and make it support and bounce, now we're talking. And this thing has a good shot to go up there toward 24s. So I think 1750 or so is about right here. If it can get down to 1768, so 1768, that's about as low as you want it to go before this thing can bounce. So some thoughts there on ALKS. Another one here is MDLA. So here's MDLA here. This one, inside value relationship. So the pivot range is inside last month's pivot range, and we're compressed. And that is an energy building phase that can lead to expansion. given the market structure move up we're seeing right now, the expectation would be for a push up toward the next area of resistance. That would be 34s. So we may be looking at a move to between 32 and 34 pretty soon. If it fails to hold this 23, it opens up 17 below. So yeah, that's a good one, building some energy as well. Teva is another one here. With Teva, we have quite a sell-off that happened today. 1150 here on this one. It's really had trouble staying above 13s here lately. Anytime it's gotten above 13, it's been smacked down, so we clearly know where resistance is. There it is right there. It was the gap down. There it is, resistance, resistance, and resistance. The trend remains up, but if you're going to take the previous month's midpoint offered, then you're headed back to the previous close. So if this one's going to bounce, then you'd want to trap it somewhere in here between 10 and 11, right? You want it to drop here, trap down here, and then return it back to 13, and then see if this thing can get a break through those highs. Because the moment it can get through 1350, 14, right, it opens up all of this back toward 20. I mean, that it's just all of this is reopened. At some point, it's going to make that move, perhaps. But right now, again, got to see if it can hold on this pullback, and a pullback toward $10 to 1050 or something like that could be the ticket here. So we'll see if it can form a strong higher low on the next rotation. Another one here is ABB. Yes, right now pulling back in after hours a little bit. ABB with a big time gap up. This is an ADR here. Solid turnaround from the 15s all the way back to 23s, right? Still has a gap up, a major gap to fill. ADRs always have gaps, but I mean a significant gap to fill. This one has a ton of energy here. Look, that right there was an inside value and a big move. Higher value relationship and a strong start to the month. Again, any pullback could be a good buy for a continuation toward 25s here as this thing continues to trend up. It's held the 200 on the turnaround here, and this value relationship remains intact. So if it were to have a couple of bad days here, that may be just enough to buy in ahead of the next new high for this one, at least on a short-term rotation, right, as we go up here and grab the gap and perhaps retest the recent high. So right now, looking pretty good so far in this one as well. RCL. Here's RCL. This one looks like some of the other ones we looked at, in that it has a higher value with a change of bias. This is also, you know, we looked at that Hilton Grand as a short candidate. This is the exact same pattern in the exact same, you know, hospitality business. Higher value here with the rejection, lower value with a chance to return back to value here at 37. So we could be looking at least a push back toward 37, maybe as low as 30 in this one. Again, this right now, who's taking these cruises right now in this environment? It could be something that again continues to linger a little bit more, and this could continue to kind of give back some of these gains. So again, this is going to be one to watch. If we were to start pushing hard through 59.5, I mean, the recent high is in play. But the way it looks right now at the start, it looks like it's fishing for the previous month's low at the very least. BAC is one here to look at. Now, BAC was down just a hair here today, 2%. This one again is part of those groups that just isn't bouncing just yet. So you have banks and hotels and airlines, the one we just looked at, cruise lines. But we are kind of on a cycle low after a significant pullback. We are coming into 22 here. 22 is very important, and that could be a buy zone. So if we come down here and flush to 22, perhaps 22 can start bouncing this thing back up again, at least a little bit, right? You know, again, not sure how much to expect out of some of these at the moment. So many people here again losing jobs, unemployed, 40+ million, and now you're going to start seeing foreclosures and the like that can start to happen. So, you know, again, whoever's left holding the bag might continue to get hit a little bit here. So this one right here may see a bit more weakness. 22s, I wouldn't try it unless it at least had a 22 retest, and then that would be an opportunity perhaps to bounce it back up a bit. Another one here is Oxy. Now, Oxy is one that has had a significant breakout move. It was during that time when a lot of these were breaking out and looking like they may make the move. I still like this one a ton, but it looked like that was one last ditch pop to get some folks in, and then now we've kind of pushed back the other way. You know, the way this looks in a longer term time frame, again, that's a pretty good 2.5 months or so of accumulation, a big push higher, and we're still above the 16 zone. Initially, we were looking at 16 to 18. If it can hold that zone, you know, you have a 32 to 36 type of move that can come. But it hasn't really had a lot to like here lately. So again, it's just not as good as it looked before, but it doesn't look out. There may need to be one more flush. So right here, for example, in the weekly chart, nice. Let's do a cleaner line here. You have that line, you have this line, and then you break to the upside right there. We may need one more flush down, and then that might help open things up to the upside. So it still looks okay, but it just doesn't have the juice anymore that it had. I think if it gets one more shakeout leg, it might provide the spark required to get this thing going to the upside. So we'll see if that can occur here at some point. This is GSX. GSX with a pullback to the PIMA trigger zone and the pivot range. This is a good swing buying opportunity right off the scans. We got a great breakout here, big transitional phase, and then you pull back. This is the PIMA trigger zone, a bullish PIMA trigger zone where you want to see a defense. Great rejection tail. Midpoint here 56.27, so any pullback into 56 to 56.25, right, could be a good buy for a push to at least return back to the highs. That could take you back towards 62, 63 in that area. So yeah, that one looks pretty good as a short-term opportunity, a 1 to 5 day candidate, but could turn into a 2 to 3 week candidate. Yeah, that's a good one right there. Thank you for bearing with me here. I know you all have put a lot of great candidates here, so still looking to finish up these candidates. Looking at Pfizer now. Pfizer with a gap up today, plus 3%, but started to fill that gap a bit. This one doesn't have a lot for me to like here. If I, at least from the daily chart perspective, if I look at the weekly chart, again, the weekly chart gives me 10 good years of look back on at least the look back that I'm using. So 28 to me has a really good LVN, or at least rejection quality. You have the LVN below it at 26. That looks really good. Right now we have this lower kind of trend line and channel that's playing out, and we're right at composite VPOC over the last 10 years. So there's no real value here where we are. There's no edge, there's no rejection. It just leaves a lot to be wanted here, but we could make a move to an edge which could provide an opportunity. And which edge will it be? If it comes up to 39, it could be faded back to value at 34. If it drops to 28, it could be faded back to value at 34. That's basically the approach right now. So I don't really see a whole lot of edge just yet, but there could be a move to get you to one of these edges pretty soon. And right now it's been sold pretty hard for the most part over the last 2 months. So this one just leaves a lot to be desired, but at least you have some higher time frame key levels to watch. The other one here is Beyond Meat. Beyond Meat, we talked about this one in the trading room. I believe it was last week, maybe yesterday. We identified these as the key levels: 170, 130, the 105 halves, and then down here, which we may never get to again, 77s. No, we could get there. Right now we're in this market structure here in the midst of an uptrend. We just had a great rejection down here and bounced. We could easily continue in here for a while. To get above 170 is going to open up that last market structure above as high as 218s. You know, we've traded that before. Does it get it in this market environment? You know, who knows? Probably not. But it's going to take to fail back below 129s in order to open up the next move down, right, to 105 and maybe even as low as 77s. So this one right here, at least you have the key levels to work off of. 170, 130, 105 half, 77 is VPOC. We have this as our key range, the key range low, the key range high, and the midpoint. That's our impulse move. And what that does is it gives us key levels to watch. So those are the most important points of that range, which again 167 here. The low edge is 116. So those are very important levels. So if you like Beyond and you think it's headed higher, much higher, because if this key range gives us accurate targets, and it does, 218 would be the upside and 192 would be the first scaling. So that would be the most important low, 116. If price comes down to that zone, and say we trade 105 to 115, that could be a trap opportunity that gets us back to 167 and then 192.74 and 218.32. So that's one opportunity to watch out for, is off the 105 halves. After it hits 105 half, can it get back above 116? Because if so, it could be a trap to 218. That's the idea for Beyond. Let's see here. We have Boeing as well. And after Boeing here, we'll look at XLF. So Boeing again in the news here. I believe they have what was it, FAA and the MAX issues that they're working on. So you know, again, that's very news related, and we'll see what happens there. But one of the levels that we talked about was 120. 120, right? Mentioned before in April even, and after this bounce, hey, we could drop as deep as 120, and you'll be able to double back toward 235, 240. And it almost doubled. Well, it did, I think. It's just not from the 220, the 120. The 120 took you to 240, but it got as low as the 113s here, which is that lower 25. So it did double from that point. So Boeing we had as a great buy, and we had the level pegged at 120 and rock and roll to that zone. I mean, just incredible. And now that it's done that, this is the next zone, right? It has crushed to the upside. It's pulled back, and now here's the defense off the 160s. If the 160 can hold, there's a shot now to rally this thing up toward the 285s. That's the 100% target of this key range, right? That's where we're trying to see if it can break through the highs. And if it can, you have this target here, 235, and then you have the 283.96 right there. So basically, we could be looking at, say, a 150 to 160 rally back to 285s. So this one's done quite well. Again, 120 was the big level. Not sure we see that again. But if we do pull back, there's an LVN right here that can get us higher, and we could be looking at 260 or beyond in this one. So that's Boeing. XLF is here. Now XLF has bounced down off the 200. Again, this one, financials not very healthy. Had been, the 200 had been a spot to buy, and then it was not. And then it bounced all the way back to the 200 here where it got offered again. We're now at the lower end of the range. LVN here, 22.5. You know, this is a spot where, again, you would look for some sort of squeeze here. Because if it can hold that LVN, perhaps flush out stops below the previous month's low, you at least have a rally back to the high and the 200 and the, you know, this zone right here. But man, again, based off of this here, you're not just getting to prior highs, you're actually blowing through those highs now, and that's where something like 29 to 30 could be in play. So there could be a move back toward 29 to 30 if price can stay above 22 to 22.50. So we might need to flush that and then see what happens here. But again, sorry, XLF here, the financial select index here, this is just something that's been beat up and depressed a little bit. But after you see one swing move this way, all it takes is one rejection here to swing it right back. So that's what I'd be watching for here. Something, a rejection at 22.50 can take us back toward 26.50. Maybe even higher toward 29 to 30 down the road. Another one here is Tesla. So Tesla up here 3.7% today, new all-time high. We got a closing price here of 119.63. This is just incredible. Incredible how this has exploded. My chart doesn't even look. This was one of my favorite ones to trade, all in here, and then got away from it. And look at this thing, exploded. We had a buy signal right there, and that was right around 250 or so, or 225, and I mentioned that's the one that can take us to 400. And I felt smart, but it broke through 400 and went to 1100. So, I mean, it just, who knows sometimes with these stocks. It's the market is a collection of opinions. Whether they make a profit or not, man, they've got some juice behind it. And I remember early during COVID here, when this thing rallied here, my friends were, hey, this thing's trading 900 right now. You know, do you think we ever get back? I said, if it sees 400, it's probably a bounce back to 1,000. You know, and again, it's the 400 level here where we broke out before, and there's the bounce back up. It's just been tremendous. It's been tremendous. I do not suggest selling it, but at some point we may see a pullback. And if so, right now 950 is a spot that could be the pullback zone, and it could just rip again. The fact that it's above the previous month's high here provides the opportunity to see a trap. Right, we could see a trap above the previous high and rotate back into the pivot range, and that pullback could lead to a move higher. So again, any pullback that may occur, I would say right now it's 1 to 3 days of a pullback is all you're getting, and then it's going to rip face to the upside. And so right now it's probably best to just wait for a pullback to 1,000 or maybe as low as 950, and then buy that dip for a move to 1,200 and beyond. This thing is just so strong. At some point we'll see a clean out, and if it fails to hold 950, that's where a bigger pullback can come, because you're rejecting these highs and everything that's happened up here. You know, from this shoulder and potential head perspective, again, 950 would be the spot to watch for maybe a buyback in on this one. And I know we're coming in on 90 minutes here, so almost done with the rest of these here. And if I don't get to anything here, we can see it in the trading room again tomorrow. AZN right here, consolidating, narrow pivot range for the month. It is a lower value relationship, but closed above the mid here today. That compression right there suggests to me that we are gearing up for expansion. Again, likely to the upside unless it can't hold 51. If it can't hold 51, then that's where rotation can happen of some degree. But right now, this thing looks pretty good to the upside. It's building that energy. When you build 2 months of energy, you could explode one way or the other for 1 to 2 months. So this one has a pretty good breakout potential here coming. Oh, and can we do this YouTube streaming next time? Rob's asking. I haven't tried YouTube Live for these. That's something that I have considered, and let me know why you like it there. I know today we had a couple of drops here, which is very unusual, but that would definitely be something I'm experimenting with. In addition to maybe doing YouTube Live for the pre-market videos as well, so it's a quick live show there and then on with the day. But thank you for the recommendation there. Blackbod is one that's also channeling up a bit here. It's at the pullback cycle low right before perhaps a squeeze into 70. I've liked this level off the 45s. I have a buddy here that works for Blackbod, and I actually texted him and said 45 is the level. 45 is the level. And it was. You know, we got a little bit lower than that, but you know, you saw the absorption that came in here off of this 47.5, a nice continuation up. Now it's trying to hold higher market structure with a shot at moving up. 66 to 70 are the next two upside targets. You got CVPOC here and the 200-day. Now the 200-day has been offered heavy in this stock. Heavy, 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 heavy. So if it gets to 70, it's probably a hard take your profits and run. That's Blackbod. Overstock, do we have to? Do we have to look at how Overstock went from $2 and rallied to 30? Do we have to? I love this stock. We've had it as a long candidate many times. It's done really, really well. And I passed on it when it was down here, and that was a bad pass. It's exploded like crazy. And we talked about the fact that as this move was progressing, we have talked that, you know, it likely comes out and gets 30 because it's going to take out the high. And now that we've done that, now what? This stock has been very, very volatile. We can look at the weekly time frame there, but this one, you know, has had higher highs here on that path. And here was this high, and again, it just barely took it out today, so we might have a little bit more up here. But it's always come back and hit a new low. So down here, a new low. Down there, a new low. I mean, I don't know if we can hit a new low into zero, but we've seen crude go to negative 40. But this has been tremendous. I don't know if we get another one of these deep pullbacks, but I do know that $10 perennially is a major buy opportunity. If you see 10, it's just a resting buy for a double or a triple almost every time. So $10, tremendous here. And again, not eager to buy at these highs, but it's definitely in a path higher here. And at some point, you know, we'll see if it can find acceptance above 30. Because if it finds acceptance above 30, it opens up the next zone ahead up to 45. All right. Well, that seems to be all of the candidates there. Thank you so much for the suggestions. We went marathon today, 90 minutes strong like soccer players. Again, thank you very much for joining me for the PivotBoss Monthly Market Outlook. Again, this will be posted to our feeds as soon as possible. And if you do watch the replay, please hit the like button. I want to see if we can get 100 likes on this video. That would be tremendous here for a monthly market outlook. And again, I'll post this as soon as possible. For those of you that have just subscribed to Premium, we'll see you in the trading room tomorrow. Had a great trading room session today. Picked the high in the NQ. Didn't get filled the high, but I definitely had orders sitting there waiting to be filled. But we'll have another great day here for us tomorrow. Have a fantastic rest of your day, and I will see you all in the trading room. Take care.